Good morning. It's about 10:15 on Tuesday. Just wanted to give a quick update on things. It's been a pretty rocky market here year to date, and especially in the last couple of weeks. And getting a few people, a few calls. Not many, but there's a few that are wondering, what to do here because we haven't seen this before, and it's the worst one we've ever seen. And so I just wanted to give a really kind of brief recap of what's happened here and what we see going forward. First of all, we have seen this before, and we've been through much worse. And this is, I've been warning everybody in the last years, especially screaming almost, that when we get into strong years like that, in the last couple of years, strong market years, or we don't have any market corrections, which is defined as 10% or more to the downside. When that correction, that next one does come, it tends to be more violent. And that's exactly what's happened. And we've seen that before. What's made this tough the first of the year, in the first quarter of the year, which is the second worst start to the stock market in history, was all the surprises that came along. Markets don't like surprises. And that's the GDP numbers going from major positive, major negative. First quarter is a negative GDP. What's important about that is that recession is defined as 2 quarters in a row on negative GDP. The war in Ukraine, the inflation problem, the interest rates going up faster, all these things are major surprises to the market. The market doesn't like that and upsets things. And when we've had a market in the last 2 years, it was just a recipe for what we're seeing right now, very volatile action. The other thing that's going on here in the last few days, we're seeing, over the last 2 years, there's been $1 trillion in margin. Margining is where you can borrow on your non-IRA assets. You can borrow up to 50% on that. A lot of unsophisticated investors in the market have been talking about that. This is what happens. They start getting greedy. They go on margin. And now we're seeing that being unwound in the markets. A margin is where you have to sell out in order to cover it. And a lot of people don't have that money sitting in the bank to do that. So we're seeing that right now. So whether we're in a recession or not, it's hard to tell just yet. We'll know more in early July. It's the end of the second quarter, going into the third quarter. If we get a second quarter of negative GDP, that will be defined as recession. The markets are giving us mixed signals. The indexes, the NASDAQ is off 26%. A bear market, which is a lead up to recession, is 20% or more to the downside. So the NASDAQ is telling us we're there. The S&P 500 and the Dow are not. The S&P is off 16, the Dow is off a little over 12. So those are telling us right now they're still in correction territory. So mixed data there. This all reminds me a lot of the 70s. I've been talking about that. We could very well be in a very prolonged type of a recession where, like the 70s, it didn't go as deep, but it was longer. That could be a possibility here. This all said, if you look at, this is not the time to panic. This is not the time to be making drastic changes. This is not the time to sell out. People that sell when we're down, that solidifies a loss. And it'll take years if you ever recover. There's people that still haven't recovered from 2008. This is a buying time. And if you look at the 70s, the 80s, the 90s, the 2000s, I mean, look at the two nasty markets we had in the 2000s. The people that continue to buy through those and buy when things were down, dollar cost averaging into the markets, very, very powerful, because when they do turn, guess what? So when things are down, that same dollar you're investing is picking up more shares. For those of you in retirement, we've been looking at this. We don't have anybody that's down where the indexes are down. We're doing very well through this. And I caution you, and I'll be talking with you constantly. I've been talking with people year to date. I'll be doing more of that. Look at it in terms, don't look at it in terms of dollars down. Look at it in terms of percentage down compared to the indexes. Especially when you're, 20 years ago, our account values looked a lot lower than they do today. So be careful on that. We're all doing fine through this. The media, once again, is playing on this. I've harped on this. if you listen to the media in any given day, you think the world was ending. They love this stuff. It keeps you attached to them. And the more you watch them, the more they have you hooked emotionally. As I've said in the past recessions that you've been through with me, those who've been through it with me, turn off your televisions, go for a walk, do something different, because this stuff will wear on you. A lot of people think they keep losing money month over month over month. Again, we haven't seen this kind of thing in a long time, but we have seen it. It's just the last 2 years have really, it's really spoiled us. And, but this is more normal. These are more normal times. And frankly, getting rid of this, a lot of the speculation in the market, this longer term ends up being very, very healthy for the markets. We need these times. I don't care. We've been through markets. We've been through markets that have been down 50%, 60%. We've been through markets that have been down 80%. We've never been down that low. We'll make it through this. That's why we have good diversified portfolios, good quality. This is the time to be adding dollars to them. Not that these are the times when you're panicked, the times when you're stressed are the buying times when you look back on it. This one's no different. We have seen this kind of thing before. We're repeating history. It's different things that are creating it, but we're seeing history. And it's not just oil prices, which were in the 70s that are high. It's food prices, issues there. The war lingers on. And it could be other surprises that come along that might take this thing even lower. But again, it's just, these are buying times, and just slowly buying into these markets. We'll come out winners on the other side. We don't know when, we don't know how long this is, but given the inflationary problem and the fact that rates are going to have to go up higher, this could be more of a prolonged deal here. And but it's, unemployment is still low. Companies are still flush with cash. There's positives out there, but eventually, if inflation doesn't come back under control, we will end up in a recession. But again, they're healthy. We've seen them. I've told you all we're going to see them again, and they come out of nowhere. When we least expect it. If we're indeed in a recession, certainly faster than I thought we were going to have. I was looking for more into next year. So nothing of surprises here. And the only surprises are the things that's creating the volatility, but we've seen it before. So I just, stay calm, try not to watch the media. The media is playing in on this again. I hear it every morning, every night. It's just, we've seen worse markets than this. We saw this was March of 2020, we were down worse than this. It's just the difference is in March of 2020, coming out of that, within 1 to 2 months, we had major recovery, the fastest recovery in history. I don't see that happening this time. This is going to be, again, more normal. It takes several months to work through these things. Always, always, always. This is no different. So just want to kind of give you an update, kind of what we see going forward. We'll continue to do this. Please turn off your televisions, go for a walk, do something different, because emotionally it'll drain on you like it always does. So if I don't talk to you between now and the next couple of weeks, have a great Memorial Day. It's a good start off to the summer. Hope we have a great summer. No fires, and everybody gets out there and plays. If you haven't been getting some out there and getting some trips planned, it's time to do that again. We've gone on way too long. Just doing some local stuff. It's time to get out, get some fresh air. So we'll stay with you as always. If you need anything, please call us. We're here. And with that, I want you all to have a great rest of the day here and great rest of the week.